We are in a potentially absolutely explosive scenario for 2025, really starting after this election, but for the next 12 months could be just absolutely explosive on the upside for Bitcoin.
Fred Krueger, who is a Stanford PhD, a multi-millionaire, if not more, from his decades of success on Wall Street.
As you guys know, I used to be a bond trader.
Also friend of the channel. He's been on Altcoin Daily.
And that meant I watched interest rates like crazy.
Just gave his 2025 Bitcoin forecast based on the upcoming Fed pivot.
And one of my nicknames was Fred Krueger the Merc, because I traded a ton of U.S. Interest rate futures, in particular LIBOR futures, on the Chicago Mercantile Exchange, and they would always be calling Fred Krueger the Merc, pick up, to close my trades at the end of the day.
And there's one thing.
Don't fight the Fed.
There's one catalyst.
Don't fight the Fed.
That affects the Bitcoin price more than anything else.
This is the most important thing in the world, is what is interest rate policy?
AKA,
don't fight the Fed.
Don't fight the Fed. So what's about to happen at the next FOMC meeting, the next Fed meeting on September 17th with results on the 18th, the Fed is going to pivot and cut interest rates for the first time since their emergency cuts back in pandemic 2020, and for how aggressively they have tried to suppress markets, bring gravity to markets to fight inflation over the last few years.
And at the end of the day, let's zoom out a little bit and think about the up cycle that we saw, where the Fed has started with 25 and then ramped up pretty quickly with 50 and 75 basis point hikes. That is, in my opinion, an admitting of they were behind the curve. And now we're at the other end of the spectrum where the Fed is now going to lower rates.
The reverse is about to happen.
I think you cannot underestimate how important this next cycle is going to be. We are at 5 3/8 right now in interest rates, and we are going to have somewhere between a 25 and a 50 basis point rate cut next Wednesday, and we're going to be having some discussion as to the future path of interest rates. But I think the most important thing is if you look at where Fed fund futures are trading, and I was just opened that up today, and I was just, oh my God. Interest rates are 5 3/8. The futures on interest rates in December of 2025 are at 97.19, which says that the interest rate that people are betting on, the prediction market for interest rates, is effectively 280. 280. So the market's telling us we're going from 5.5% interest rates to something below 3% in a year. That is a massive, massive move.
And by the way, if you want to stay up to date on markets, if you want to keep receiving crypto alpha, there's no reason that you shouldn't subscribe right now. He puts out such quality information. I like him because with the trillions and trillions of dollars in US money market funds that are going to be looking for a better place to park their money if they're not going to be receiving these higher yields, over 5% yields anymore, as rates come down, that means we're about to enter a risk-on environment.
When you have $4 trillion in money market funds, they're just sitting there. When you have $200 trillion worth of bonds out there, and you lower interest rates from 5 3/8 to below 3%, which is what is going to happen, you're going to have a flight to risk assets.
What is an asset that's finally regulated in US markets, being offered by Fidelity, Charles Schwab, BlackRock, the largest asset manager on earth? That's new this year.
My opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate
and has such a limited, mathematically finite, scarce supply that price, if enough demand hits, can only go in one direction.
What does that mean? That means equities go up. That means real estate goes up, okay? That means bonds go up, and that means Bitcoin goes up.
And think about the sell pressure that we've had for the last few months, which is coming to an end.
Definitely some sell pressure there.
Altcoin Daily shared with you a few weeks ago the reason Bitcoin dipped this last month. German government selling, Mt. Gox redistributions, US government selling Silk Road holdings, Japan's yen carry trade, which collapsed all markets. All selling was absorbed, as explained by Swan co-founder.
A big factor there is we had huge pockets of supply that got unlocked and were sold into the market. You have the US Marshals selling in excess of $1 billion from the Silk Road coins. You have Germany selling $3 billion. And you have the very long-awaited Mt. Gox distributions where people who have been waiting for these coins 8 years plus got their coins finally. If you're waiting to receive some Bitcoin from a bankruptcy for over 8 years, some of those people are going to sell some of those coins. I think it was relatively muted compared to what it could have been. This was a very billions of dollars here.
And this is really why Bitcoin has been consolidating, yet gold hasn't had that sell pressure.
And it also means gold goes up. And we're starting to see that gold today, for the first time ever, trading above $2,600 per ounce. And that really should tell you, because there's no Mt. Gox of gold. There's no Germany selling their gold reserves. In fact, it's the exact opposite. China's buying tons of gold. And I think this is going to happen to Bitcoin, but even more.
And what is the upside for the Bitcoin price in this next year?
You know, I definitely think something like 200,000 is definitely in the cards for end of 2025. We could be at something like 3 to 4 times higher than where we are now. I think it's going to be an absolutely amazing risk return. I would not play it with too much leverage. If you want to have any leverage at all, I prefer no leverage. I always prefer no leverage. But I think you should be heavily allocated to Bitcoin. I think it's going to do extremely well.
And breaking news, this is why you subscribe to Altcoin Daily. The SEC just admitted to mislabeling crypto tokens, meaning the SEC regrets any confusion from dubbing tokens as securities. And this was all in a court filing. According to a footnote in a September 12th court filing, the US SEC has retracted its long-standing characterization of cryptocurrencies as securities and intends to use more careful language in the future. Gary Gensler says, oopsie, my bad. The retraction arose from the SEC's ongoing lawsuit against crypto exchange Binance for allegedly offering and selling unregistered securities. As a reminder, in a 2023 complaint, the SEC identified 10 crypto assets on Binance platform as securities, including Solana, Cardano, and Polygon. The update today is this: the SEC regrets any confusion caused by its characterization of these tokens as crypto asset securities and no longer uses the shorthand term. Wow. We talk about a Fed pivot. This seems to be an SEC pivot for language. Yet, Binance is still being sued. The SEC asserts that even by this narrower definition, Binance remains at fault for unlawful securities offerings because the exchange's tokens continue to be offered and sold as investment contracts. So I think they're saying that the protocols, the tokens alone, aren't securities, but Binance, according to them, is acting as a securities and exchange and offering them as investments. Obviously, this is an ongoing story. It has never been more important to stay up to date with crypto. Click subscribe and join us on our road to 1.5 million subscribers by the end of the year. And like always, see you tomorrow.